Hi guys, I've been getting a few requests about 4-hour trading time frames because a few of you like to trade on a 4-hour. No problem at all. We have a strategy we call the SAR, stop and reverse. It's a fractal based strategy. So we wait for the market to pull back, we stop, and then reverse back with the trend. So I'll put a screen on, give you a flavor of what the strategy is. Hope it helps. Let's get the screen share put on. Let's share this screen. Okay, we've got the Aussie USD here. So it works for Forex. It works for cryptocurrency. It also works for indices also. So I'll quickly show you what's on the screen. You can see here with Heikin-Ashi candles, as we always do. We're on a 4-hour time frame. And we've got the 200 EMA here. The 200 EMA is our gospel as a day trader for the direction of the trend. This blue line here, you will see, is the 9 exponential moving average. Pretty key, pretty important to our trading. So we call this the SAR, the stop and reverse. So I can read fractals because I can just see the screen, but we have a fractal tool, of course. As you know, we show that tool, and there we go. The yellow lines show the fractal breakout long, and the red lines show a fractal breakout short. But these are on the website to buy. You can either get these for Pro Real Time. This is the software I'm using at the moment, or you can get them for TradingView. Either way. But we'll leave the lines on just so you can see. So the SAR, what we're looking for a market to pull back towards the trend and then bounce back off, pull back towards the trend and then bounce off. So move, stop, and reverse. So that is the strategy I'm going to show you now. So what we're looking for the market to pull down, and we're looking for the market to pull down towards the 200 EMA. And then what we're looking for is a fractal setup. So what I mean by a fractal setup, it's a 3-pin setup. This low pin is the bottom of the fractal. You can see it's marked here. This is a setup pin, which is a lower, a higher low. Let's get that correct. And then the confirmation of that fractal is a higher low. So we've got the low, a higher low to the left, and a higher low to the right, which forms a fractal. So that's what we're actually looking for. Just clear those off the. So we're looking for that all the way through this chart. Right. So one key thing that is vitally important is what we're looking for, this 3-pin, and what we're looking for is the identification pin after the fractal here that help form the fractal. We're looking for this to be an Heikin-Ashi bar, and we're looking for this Heikin-Ashi bar to be green. And we're also looking for the Heikin-Ashi bar to close above the 9 EMA. Vitally important. It has to close above the 9 EMA. The body also has to be greater than 4 points. If the body is a small body like this, indecision candle here, indecision candles here, 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 they're not the signal candle. This is the signal candle. So what we're going to do, we go for a 1-to-1. Just get me a little tool to identify a 1-to-1. Market pulls back. We have a 1, 2, 3, and we have a break here above the signal line, and we go for a 1-to-1. So they're at 1-to-1, market enters, and we run up and we trade. There is another signal. It's just broken above and completed above the 9 EMA. So there's the second trade that you would put on. The third trade, market pulls back, a very small candle, and you wouldn't take that. But also, really, you wouldn't take this, because whilst you've got this in train, that clears out. So you've got here, which is a 1% risk. We do 1%, 1-for-1. And then you've got this candle on a small pullback, another candle, but this is already in process. So you don't want to put yourself at any more risk if you possibly can. We've got another candle on a pullback here, a 1, 2, 3, which does close above here, and then you can enter here. And we've got another candle, another trade in there, which is very nice indeed. The market then moves off yet again, and then market pulls back. We have a candle that just is a 50-50, so we take this candle. There is no break above here, so we have to come back down, wait for the market to pull back down again to give us another 1, 2, 3. We have a break right on the candle here. That is good enough, and we'll take that trade there, and we have a 1-to-1 there. Market then comes back. We have another break here, but as you can see, there is no breakaway, so we have to wait for the market to pull back again. We have a little, the market probably a 50-50 call, but we could actually use the next one. That's probably okay, but let's use the next one. And there's another trade there. And as you can see, the market then moved away. So not every trade wins, but these are all trades that we took on stop and reverse, and we're taking the trend is your friend. And you can see they're 1, 2, 3, 4, 5% straight away. Now those are 4-hour trades, and we only, sometimes you can use a 1 hour, but generally we like to use 4 hours. So it's called the SAR, SAR, stop and reverse. So we can maybe let's another one, Bitcoin. For instance, you can see here there's another trade there, there's a Bitcoin trade there. Market pullback. Well, you wouldn't take that because he's still at risk. Next item here would be here, and there's another trade there. That would one. There's another trade here. Stop and reverse. You can see we're 328 pips up on Bitcoin. It's different strategy. We're at risk if you talk. If it's a spread bet account, this so 320. 23 is equivalent to 3,000 on MT4 speak. We've got another, we'll do a chain link. We're looking at chain link. There's another one here on 4 hour. We're up on chain link as well. And you can see the market's moving in the right direction. We're looking for, let's just pick on anything, stop and reverse. There's one there. Pull back. There we go. There's another one there. I'm just picking up these at random, just for illustration purposes. You can see how consistent these can actually be when you're taking them. So break there, and you can see they don't work all the time, just most of the time. And let's have a look. Well, let's have a look at the NASDAQ. Just want to show you these that actually work. Where's the NASDAQ? Oh, there's a FTSE will do. There's a FTSE again. Market, 4-hour market started here, where we've got the market positive, and you can see here another one there. Boom. Another one works. Another one bites the dust. Another one there. And another one there. Pulls back, pulls back, pulls back. You can see you don't have to take every single one of these, but they are very, very good. Very, very good indeed. So just let's stop that share. It's on a different screen. Back again. Well, that was a 4-hour stop and reverse. We use fractals, a reversal fractal on the 4-hour. If you like 4-hour trading and you want to trade with a trend, very, very good tool. If I can get into some more detail on the other things as well, that's not a problem. If you like what you see, please subscribe, share the video to your friends, and give me a like. That would be nice. It helps the channel. And if you want me to have a look at anything else or put a bit more detail on this, how to extend profits, I'll follow this up with an extension of profits on my next video, and it will help people a bit further to get a little bit more money out of the market. But hopefully that will help. Have a try, see what it's like. You can see it works on Forex, it works on commodities, and it works on indices, and a little tool in your trading bag to make you some more money. Hope you enjoyed that. Don't forget to support the channel. Bye-bye.